Welcome to TradeTheMBI.com. This is John. This report is for the 19th, and a little bit of a up spike there to start the new week. Wasn't much. It started off pretty innocuous. We had the pre-market rise, then we filled back in that space, made new highs, and then retraced them, only to finish back out at the top side of it. And this is exactly what we expected from the shakeout reading once we would turn positive from back over here. Been escalating ever since. Now we're getting up to warning lines, which should start to give us an indication of if you're not getting your cyan below red, you're probably not going to last too much longer, so to speak. The NQ is still unable to break out of the range, and so I think that is going to be the question mark of until you see that happen, that is really going to hold back any breakout from the S&P. What you're seeing is this elevated euro and a little bit more of the broader market actually catching up with some of the earlier gains by a few others that have elevated price. Being up at this 120 still, it's a good 4 cents. It's a significant amount above really where the real range should be, and that's enough to push earnings a little bit higher, just enough. TLT, again, bonds definitely going to, well, they should stay below the ABM green here and continue to fall. It's still way elevated given where things are, but the question really becomes, will the Fed do anything or punt again? And the reality is where those prices are right now, they're suggesting that they're not going to do anything. But I think we're starting to see the potentials of some areas heating up. The question really is the residual effect of the hurricanes and whether there'll be any additional. Oil price is going to stay up a little bit longer. We talked about that. Looked fairly decent. Not to mention the fact that we're seeing increases in demand, which again points to growth aspects. And nobody believes that at this particular point, well, we had these positive extremes that we were talking about since the rally began, and then once the short started, that's exactly what you would expect to want to fill back in place. Starting to get towards an oversold already, so it will present another opportunity. From a 5K standpoint, this is what we were talking about. We were doing a report as we were getting to the peak. We saw that these were positive extremes. We expected that to get back filled, came back, but we also said, you're going to get right back up to the highs. We did that in the open market and then completely filled all the way back down to the previous day's low, and cruise right back up to fairly neutral to what the pre-market was, and it's kind of where we're at, a little bit flat right now. Everything's just pretty much on hold. I mean, there's more talk about Obamacare repeal and a few other things, and really there's enough excitement from other things, so you're going to look to the political arena to see if tax reform and these other things are going to stall or actually have some merit. And in the interim, business will do what business does, and things have quieted down as long as there isn't any major jump into North Korea or some other known hotspot. Otherwise, things look pretty tranquil, which I think is being reflected in the ranges as well as volatility in that. So, one step at a time. But as always, though, trade well. We'll talk again on the Skype chat.